Hello, good afternoon.
Yes,
Welcome
good
to the
afternoon.
Good
CFC
afternoon.
Et bonjour.
webinar
Good
on the
afternoon.
open
Good
call for
afternoon.
proposals.
Good afternoon.
We are waiting for the system to process everybody, so people are joining as we speak. My name is Andrei Kuleshov. I'm a Chief of Strategy of the CFC. And here with me is Mr. Chris Rallis, who is an investment manager at the CFC, and together we will
Good afternoon.
through the open call for proposals. Now, this is the 28th call for proposals by the CFC. So as the name suggests, it's a regular exercise for us. And we encourage everybody to read the documents on our website and to submit their applications as specified. And we will base our presentation on the documents that you can further download from the website. Also, we are making a recording of this presentation, and the slides will be made available to all people who registered for this event. So without further ado, I would like to proceed. Now, a few technical notes to start with that if anything technology drops off on you, simply reconnect with the same credentials, you will be admitted and you can continue participating in the event. It is easier to respond to many questions using the chat function on Zoom. Please type in there and we will, in the background, we will try to answer as many questions as possible. Also, kind request to mute your microphone unless you are going to speak, to keep the noise level in the virtual meeting room to the minimum. And I guess the Zoom platform is sufficiently familiar to all of us, so do raise your hand or just wave on the camera if you would like to speak. Now, in the interest of smooth conduct of the meeting, the suggestion from us is that we quickly go through our presentation, or as quickly as we can, mind you, go through our presentation, and then we will leave a few minutes to answer certain questions. Also, please feel free to ask questions in the chat box and feel free to email us on the email address for the open call for proposals. This is a real address, so somebody will read your message and somebody will reply. Now, moving on to the substance of the presentation, we'll talk about the Common Fund for Commodities. It's not a widely known organization. Why commodities are important, why the Common Fund was created, and how we run the call for proposals. In a nutshell, the Common Fund for Commodities is an intergovernmental financial institution. While it's not as widely known as the International Monetary Fund, in substance, the organization is the same. It's a financing agency under the aegis of the United Nations. We are based in Amsterdam, in the Netherlands, since 1989. Over the time, we accumulated 101 member countries. So this is a membership-based organization. A country must be a member of the CFC for us to be able to operate in the country. We also have a number of organizational partners who are considered institutional members, and that's the European Union, the African Union, the Common Market for Eastern and Southern Africa, Southern African Development Community, Economic Community of West African States, Economic and Monetary Union of West Africa, Caribbean Community, East African Community, and the Indian Community. These are all organizations of regional economic cooperations. These are all partners of the CFC. Over the years of its existence, the Common Fund financed over 500 various projects. The total financing of these projects is now exceeding 800 million. The CFC has pivoted to become an impact investor since the year 2014 with the reform of the CFC. And in this period, the CFC had invested 52 millions in 50 operational projects, out of which 38 million are currently committed for currently operational projects. And over the time, we had activities in 99 countries. So for a small organization, and I emphasize that we are only 26 people based in the only place, headquarters in Amsterdam, the Netherlands, this is an extremely wide mandate and extremely wide outreach, which we are trying to fulfill to the best of our ability. Turning to commodities, flipping this slide slightly upside down, the mission of the CFC is summarized as making commodities work for everyone. And that means that we aim to make commodity sector in developing countries to contribute to poverty alleviation through strengthening income generating capacity of the commodity sector, mitigating the vulnerabilities, and generally assuring that commodity sector contributes to the well-being of the poor and the vulnerable people. And the vision of the CFC, how we're achieving it, is we strengthen the commodity sector, we strengthen the enterprises in the commodity sector, we support them in transformation and transitioning to becoming effective contributors to producing income, to alleviating poverty, and generally contributing to sustainable economic growth and development. Now, commodities are understood to be the backbone. It's the major basis for economic activity in most of commodity-dependent developing countries. We believe it's originally our own estimate that commodity dependence is at the root of poverty and vulnerability of over 2 billion poor people worldwide. And the CFC investments, they seek to transform commodity value chains to deliver value to the people who produce primary commodities. Think about a cup of coffee in one of the industrialized world capitals that cost anywhere upwards of $3 or €3. The value of original coffee in this coffee cup is maybe 1 cent. Yet without this 1 cent worth of coffee, there will be no added value for the rest of the value chain. So the idea is to bring part of this value generated in an equitable way to the root of the value chain, to the people who actually produce coffee. And the next slide is probably the most important, and we may be coming back to this slide in the presentation because this is the operational model of the CFC. This is how the CFC sees its main modality of operation. Now, at the base of the diagram, you see smallholder farmers, primary producers of commodities, which benefit a lot of people worldwide. At the top, there is international markets, which are indeed the top of the value chain. And in the middle, there are small and medium enterprises in the developing countries, which make this essential connection between the primary producers of commodities and the high value markets. The CFC contributes primarily to this center. The CFC aims to work with the small and medium enterprises, which operates in commodity value chains, to bring the products from the primary producers to high value markets and to deliver value from the international buyers to the primary producers for income generation and poverty alleviation and sustainable development. Important point here is that the CFC financing in this scheme is catalytic. We simply use the money of the CFC to bring the money that exists worldwide from the international markets, from the global markets to the primary producers. So the value of the CFC intervention is basically generated by the international markets, not by the CFC financing per se, but the CFC financing plays an enabling role in the process. The CFC provides support to those small and medium enterprises through a range of financing instruments. You see 4 of them on the screen, and that's trade finance, facilitating exports of certain commodities to industrialized countries or generally to consumer countries. Capital expenditure loans, facilitating the upgrading of small and medium enterprises, also providing working capital as the blood of those small and medium enterprises that allows them to operate, and a range of innovative quasi-equity instruments which facilitate risk sharing and facilitate entry by private sector financiers into investment into those small and medium enterprises. And as we all know, it is extremely difficult for small and medium enterprises in the developing countries to access financing even from the local banks, not to mention international financing agencies. So the CFC is trying to enable this financing to come in greater volumes to the developing countries. Now, the type of activities that we know of, and this is not an exhaustive list, but we know that our contribution can be effective for small and medium enterprises to support processing of primary commodities, to support storage and warehousing of primary commodities, to provide any measures to improve or certify quality of primary commodities processed by the SMEs. Also, we very much like to see innovation happening in the small and medium enterprises, new products, new production models, new markets, new anything, new technologies are very much welcome to be supported by the CFC. Now, on the upstream, on the diagram, it's below, but also on the upstream process of the value chain, we like to invest in procurement of commodities, in primary buying from the primary producers. We have strong projects in logistics of the primary commodities in the developing countries, and also supply income, any organization of schemes with the co-ops, with the local SMEs, to provide inputs to the primary producers of commodities, to support higher quality of production and to support greater capacity to export those commodities to high value markets. Also a welcome project approach. And on the downstream, that is reaching to international markets, we are fully aware that we can support small and medium enterprises in terms of marketing, in terms of even branding their commodities, in terms of differentiating their commodities, that is their sustainability certifications for primary commodities originating from developing countries, distribution, sales, a recent subject of concern, the EU deforestation regulation. How can small and medium enterprises meet the requirements of the EUDR? Other regulatory requirements for the primary commodities to enter industrialized world markets. All of this is valid, eligible for CFC interventions. So with this broader picture in mind, we can look now into the details and some specific words as to what we can look for and what we would like to see in the proposals that the CFC could finance. So first, these are basically this is the orientation from our governing bodies, the Executive Board and the Governing Council. This is from our member countries. They would like to see us operating largely in the agricultural commodity sector, although the sector of essential minerals is receiving high attention literally in the past few months. Businesses in agribusinesses, cooperatives, other organizations operating in agriculture can apply to the CFC in support of their projects. Particular points of attention in terms of positive change, in terms of contribution to sustainable development, today include There's still continued attention to food security, any kind of resilience building for the primary producers, diversification of the sources of the base of food security for the farmers. Any projects in this direction are also most welcome. The prevention of deforestation and certification of prevention of deforestation is an interesting new direction that is developing and that is receiving a lot of financing. There are specific windows of financing opening as we look into the international markets, and there is a strong demand for proposals aiming at deforestation in the commodity sector of developing countries. Digital development has been receiving a lot of attention recently. Equally, traceability schemes, digital tools for accessibility of financing to the primary producers, information about availability, electronic warehouse receipts, access to price information in developed markets for the smallholder farmers. All of those projects have been seen before, and we would like to see more of those because they do offer promise of positive change in the commodity value chains. An increasing share also of our financing aims at promoting financial viability of the SMEs. Also, microfinance, microinsurance schemes are of interest. And generally, issues like payments for environmental services is a welcome new direction. Anything that contributes to the financial viability of the SMEs is an interesting area for project submissions. So moving on to how this happens, and this is a very general diagram. What will happen with the application that is received by the CFC? First, since 2014, we operate on a rolling call for proposals where any organization can apply. We frequently get questions. Can this agency apply? Can a government department apply? Can an NGO apply? As far as the CFC is concerned, we have a variety of member countries, a variety of different forms of organizations existing worldwide, and we welcome proposals from any organization. The only caveat is that we need to be able to sign a legally binding contract with the organization submitting a financing request to us. Otherwise, there is no restriction from the side of the CFC. We are aware that there are national restrictions on the type of foreign financing that different organizations can apply for in different countries. But as far as we're concerned, this is not a problem. Please do apply if the organization can sign a legally binding agreement with the CFC so that we can provide financing. We run 2 application cycles per year with 6 months passing in each cycle. The cycle begins with every proposal being read by somebody in the CFC Secretariat. So this is called internal screening. When somebody reads the proposal in the CFC, a checklist is completed to confirm that the proposal is eligible, that the proposal fits the CFC priorities, and that the proposal can proceed to subsequent consideration. Those proposals that check all the boxes that are confirmed as suitable for the CFC will be considered by the CFC Consultative Committee, and that's a group of 9 experts acting independently, representing themselves and representing a wide body of knowledge in terms of the commodity sector. So we like to say that you can assume that whoever is reading your proposal in the consultative committee is actually a specialist in the relevant commodity sector. So if you're sending something on coffee or cassava, or for that matter, fonio, or anything else, you can expect that whoever will be reading this in the consultative committee is actually a specialist, actually has a background in this particular commodity. So please be clear, to the point, and accurate when you are submitting the proposal. If the consultative committee confirms the feasibility of the proposal and the facts contained in the proposal as reasonable, the proposal itself as workable, there will probably be some questions and comments coming back to the proponents. We will communicate that. And if the questions are answered to the satisfaction of the consultative committee and the CFC secretariat, this will go to the executive board. And the executive board makes the decision whether to offer financing for this proposal. So this process, as I mentioned, takes about 6 months. And I will simply proceed to the calendar, which outlines how this will happen in the 28th call and in the subsequent 29th call. So the 28th call is currently open. It will remain open until April 2026. The dates, I did not write it down. I think it's 1st or 2nd April. So anything that we receive by that date will proceed through the immediate cycle of consideration. In April, we will go screening all the applications that we have received, selecting those that are suitable for submission to the consultative committee. And in June, we will make this submission. So in June, we will send the documents to the consultative committee. The first week of July, the consultative committee will meet in person in Amsterdam. Those 9 experts sit in our office for a week to review all the proposals that are found suitable, and they will come back with questions, they will come back with the recommendations, and they will determine which of the projects will be prepared for submission by the executive board. After the consultative committee meeting, as you can see, from July to October, we will probably come back to you if your proposal has been successful to clarify certain things on the proposal and to prepare submission to the executive board. And whatever we receive by April will be decided by October by the executive board. So this is our 6-monthly cycle. And as you can see in the 29th call, immediately after the closure of the 28th call, we start accepting applications for the next call for proposals. And then when the executive board will have decided on the 28th call, we will start considering the proposals in the 29th call. So this continuous process of submission and consideration of project proposals is our open call, is how we source project proposals. And once again, to emphasize the point, any organization can apply. So this preliminary stage ends with the decision by the executive board. And if the executive board decides positively on the proposal, then we will first notify the proponents shortly after the meeting of the EB that the decision has been made in favor of the proposal. And then we will communicate the conditions that the executive board sets, and they almost in every case they set certain conditions for financing. We will communicate those conditions and proceed to developing the legal documentation for the release of the CFC funding for the proposal. The legal documentation involves a non-binding term sheet where we need to agree on the basic conditions. We will conduct on-site due diligence when somebody from the CFC office will have to come to the project site to verify the facts stated in the project proposal, that those facts are valid, that all the promises that have been made, that they can be fulfilled, and so on. Once we have signed the final contract, we will look at the conditions for disbursing the money, and the project, the investment proposal can start. So this is now the process. And to start the process, you need to complete an application form, which contains the essential information for us to consider the proposal. And I would like to pass the floor to my colleague, Chris, who will take you through the application form.
Thank you very much, Andre. Good morning or good evening to everyone, wherever you are. On behalf of the CFC Secretariat, I would like to thank you for your interest on the CFC call for proposals. And as Andre said, what I will do for you today is to walk you through the CFC application form and the relevant templates that you need to submit to be considered for CFC financing. I will also share with you some tips and information on how to compile an effective and why not a successful funding proposal. Now, before I start, one important information that I need to tell you is that less is more. So please, in general, try to keep your application within the 20-page limit. Try to be concise, try to be clear. This makes both our lives easier, as we have to screen over 300 applications in each call. But also, we don't want to overwork you. The only purpose of this application form is for us to understand your company, your organization, and also your financing objectives. If we need any further information, be sure that we will be contacting you directly. Now, let's go to the next slide, delving into the first chapter of the application form. Before that, a few important information that you should know. Number one, the CFC will not charge you any fees during the application stage. The application process is open to everyone without a fee. Number two, you should provide complete and accurate information in the application. Should you know that the CFC will only be considering proposals that provide reasonably accurate and complete information in the form that I will be explaining to you. Number three, correspondence will be conducted with only suitable proposals. In the CFC, as Andre said, we are a small team. We will screen and read each and every application form, and we will consider each and every application. We will try to contact you with a feedback within 3 months. The CFC also has an exclusion list. You can find it in our CFC website. In general, we can finance everything across the agricultural value chain and any other activities that could benefit smallholder farmers. But unfortunately, if you have a nuclear factory in your company or you're producing armed weapons, we cannot accommodate your needs. Finally, we do have a confidentiality clause in our application form, which means that we will not be sharing any information that you will be providing to us to any other than CFC governance entities. So we will be informing about the application form our CFC Consultative Committee, and of course the Executive Board of the CFC, and finally the Governing Council of the CFC. Let's go now to the application form. Next slide, please. So the first chapter called Organization Background, and we go directly to section 1.1, Organization Profile. This is a very simple one. What we would like you to do here is write down the name of the organization that you're submitting an application for, the legal type of the organization, who are the founders, and when and where was this organization incorporated, and the year, of course. Just a simple example for this, the Common Fund for Commodities is an intergovernmental financial institution founded in 1989, and it is based in Amsterdam, the Netherlands. That's it, nothing more, nothing less. In section 1.2, location and target market, here, what we want you to do is basically write down the country or countries that your organization operates in, including your focus markets. So those are the markets where you offer your products or your services. Why do we ask that? Now, this is a very important section for the CFC because this is how we check if you actually are eligible for CFC financing. Please be reminded, as Andre said earlier, that we can only financing entities that are either based in CFC member countries or they have operations in CFC member countries. The list of CFC member countries is available in our website. You could go there and see if your country is eligible. In section 1.3, brief summary of financing objective, what you have to do is basically provide a short summary of your financing objectives. This means that we want to know what you want to achieve with CFC financing. So for this section, try to give us a concise but descriptive overview, and maybe also add a few bullet points to highlight the most important aspect of your application. If you have some relevant milestones that you want to include, some financing targets, maybe some year after year planning, please do it in this section. And please, let's go to the next slide, please. So the next chapter, and probably the most important for you, concerns the types of financial instruments that the CFC can offer to your company or organization. Now, before I go in depth into every financing tool that the CFC has in its disposal, let me first introduce you to a couple of important rules that you should know. The first one, the CFC financing cannot exceed 50%. What that means is that CFC funding should at least be matched by other sources of financing. This could be other loans that you might already have or you're going to secure in the future. It could be equity that you have provided in your company, but it could be also retained earnings in the future. Now, to avoid the confusion in this section, because we received quite a few questions over it, I will illustrate it with a few examples. Let's say you are a company that has some loan facilities with local banks, and you need extra working capital or a term loan to build a new factory. Are you eligible for CFC financing? Yes, of course you are. Why? Because those loans, the existing loans or the future loans, are matching CFC financing. Another example, let's say you don't have any loans, but you have already invested in your company. So you have equity in the company, or you have built your factories and other activities. Are you eligible for CFC financing? Again, of course you are, because those funds are matching CFC financing. In general, I would invite you to be creative but truthful, and let us in CFC judge if you are eligible or not for CFC financing. In case you have any further question concerning this rule, you can always reach out to us to answer it. Okay, the second rule is connected with the first one. And as I said earlier, CFC funds should always be matched by other funds. Now, our second rule says that those matching funds should be evident in your balance sheet. So what that means? It means that if you say, for example, that you have already loans with local banks, we should be able to see those funds in your balance sheet. How we do that? Through your financial statements. The third rule, and basically a principle, is that normal term of the CFC loans is between 3 to 5 years. Now, in principle, CFC enters only long-term framework agreements, which means that in the end of the day, we will be signing with you a framework agreement for at least 3 and sometimes 5 years. Now, this concerns also our short-term financing solutions. For example, our trade finance solutions or our working capital facilities, which are typically 12 to 18 months. Nevertheless, in our case, they are annually renewable for up to 5 years. Now, the final rule that we have in the CFC is that interest rate is determined by CFC based on risk profile. So I think this is the question that most of you are asking in the chat. And of course, you're entitled to learn more about this. So the CFC has a very transparent way of calculating its interest rate. What we do is we take into consideration the country risk plus a company-specific risk minus an impact premium. Now, it may sound complex, but in practice is very simple. And it is translated as normally we are always cheaper than the local financial institutions. And among our other development finance institutions, other impact investors, we tend to be on the cheaper side. In our current portfolio, is the range of interest rate goes from 5% going all the way to 12%. This is just an indication, and it includes different kind of countries across the world and includes many high risk financing activities. But it's a good indication for you. Let's go to the next slide, please. Yeah, and now we are going to delve into the financing tool that the CFC can offer to you. Now, the first one, it's trade finance. This kind of facilities should be relatively familiar to cocoa exporters, coffee exporters, soy exporters, and any type of company working in the most developed value chains. So what is trade finance? Trade finance is short-term financing facilities for the execution of specific purchase orders. This could range from a disbursement against documents, but it could be also that the CFC disperses funds already at the time when the company goes out there and buys the raw materials from the farmers. Now, what is important to remember for trade finance is that since these kind of facilities are linked to the execution of specific POs, we would like to know more about your clients. Now, you will counter this and tell me, Chris, at the moment when we will be submitting this application, we will not have this kind of information. And of course, you are right. Of course, you cannot know what financing activities you will have in 1 year or 2 years or in 6 months even. So you can provide an indicative description of your clients. Now, why the information of clients are so important? Since, as I said, the trade finance facility is linked to specific purchase orders, the basis of this type of facilities are a tripartite repayment instruction, which includes the CFC, you, and finally your buyer. So how will that work in practice? Let's have a simple example. Let's say you are an Ugandan exporter and you have a client in the Netherlands and you want to export coffee. You receive a purchase order from your client, but you need financing, working capital so that you can go to the farmers and buy coffee. What the CFC will be doing, it will be using the purchase order as a basis to disperse against this purchase order the money you need to buy the raw materials. Then the company will be executing the purchase order, exporting the coffee to its client. The client will be repaying you through the CFC. So why this type of facilities are very interesting and they're very advantageous for exporters particularly is that in normal cases, we don't ask any other form of collateral other than the purchase orders per se. Now, the tenure for trade finance facilities is maximum 12 months, but annually renewable for 5 years. The amounts we offer range between 300,000 and go up to 2 million. In the box, in the collateral section, in the table you see in our screen, you can either provide the names of potential clients or the countries you just export to. Now, let's go to working capital. Now, working capital are flexible, untied, short-term financing solutions. that are provided through the CFC. Now, in this case, the CFC, of course, exercise less control than in the case of trade finance facility. So that means that the CFC would be requiring a stronger security or collateral. Now, this kind of collateral could be a pledge on inventory. It could be a pledge on receivables. It could be a pledge on other fixed assets, for example, land or warehouses or a factory. But we could also work on a collateral management basis. Or we could also accept a third-party guarantee, for example, a bank guarantee or even a government guarantee. Now, the rule of thumb here is that the longer the cash cycle of the company, the more securities is likely for the CFC to ask from you. The tenure for working capital facilities ranges between 12 to 18 months, again renewable for up to 5 years. The amounts, again, are the same as in trade finance facilities, from 300,000 to 2 million. Term loans. Term loans are the classic CFC product concerning basically CAPEX loans. That is loans for the construction of warehouses, of factories, the purchase of machinery or other tools, or even vehicles. The tenure for the term loans offered by the CFC is maximum 5 years, and we offer usually a grace period of 2 years. One note here that I should make for any financial institution that would like to apply for CFC financing, you could actually use this box to indicate your interest on CFC financing. Let's go to the next slide, please. Yeah. Equity, and I've seen a few questions in the chat room. Equity investments are part of the CFC mandate. Unfortunately, I have to say that at the moment, we are not providing equity directly to companies. The reason for that is that we do not have the capacity to do this kind of activities. But what we do, we provide quasi-equity to other impact investment funds that usually have a higher risk profile than the CFC. You can imagine here impact investment funds that are engaged into activities such agricultural financing, livestock financing, and activities in general that are at a higher risk level of the CFC. So if you are an impact investor, a fund that is engaged in financing in agriculture, please feel free to reach out to us. We're always interested in new proposals in this section. Now, development impact bond. The Development Impact Bond is one of our recent innovations here in the CFC, and actually the Common Fund for Commodities was one of the first entities that introduced this type of facilities in the world. So what is a Development Impact Bond? Development Impact Bond is outcomes-based financing, and when we talk about outcomes, we mean real, tangible impact on the ground. This instrument has been designed particularly to unlock financing for non-governmental organizations, international organizations, public agencies, and any other actor with a very interesting project in terms of impact. If you would like to learn more about our Development Impact Bond facilities, you could check in our website. There is also a video there that goes into detail on how these kind of facilities work, and we are always happy to receive proposals for our deep facilities. So feel free to reach out for any questions. Let's go to the next slide, please. Yeah, and our final tool here is our fast track loans. Those kind of facilities, the fast track facilities, were designed during the COVID period, where many companies and organizations required emergency liquidity. These facilities have been really successful, and so we have kept it in the, let's say, CFC arsenal. Traditionally, this one is one of the most competitive product lines of the CFC. It serves very small ticket sizes, as you can see here, with the amounts ranging between 50 up to 300,000. So we tend to reserve this kind of facilities to highly innovative with high impact and potential and additionality for the CFC projects. But also keep in mind, please, that if you are a small company or you're a company that you require a small amount up to 300,000, you could consider utilizing this facility. For instance, if you would require a trade finance loan up to 300,000, you could apply through this type of instrument. The big benefit of fast track financing is basically the time. It takes shorter time and less time to approve and operationalize this kind of facilities. So let's go to the next slide, please. Perfect. And now we go to chapter 3.1, management operations. So starting with the first chapter, what we want you here to do is basically provide us with the names of the people managing your company or organization, who are the key people running the company, and what is their specific role or job title. You can provide this information either through text or more preferably, you could use a simple graph, for example, an org chart, an ownership structure chart. It's always faster and easier for both of us. In addition to that, what you have to provide here is information about who are the shareholders of the company, how is the ownership of the company is divided between shareholders, and also, is your company a holding company owning other companies, or is your company owned by another company? Those are all relevant information. Again, you could provide this information with text, but a graph works always better. In section 3.2, current business model, what you have to do here is basically provide us with a high-level description of what the company does. Please assume that we know nothing for your value chain and nothing for your company. You are the experts of your line of work, so start with the basics. Explain to us what kind of products do you offer, what is your line of work, and information that you could include here, for example, is the type of products you offer, the type of raw materials that you are sourcing, and also what kind of relationship you have with the farmers. What kind of processing activities does your company have, or what kind of processing is your company undertaking? Now, information that you could include here could be the volumes you export per year or produce per year, the processing volumes per year, export volumes. You could include names of clients and volumes per clients. Also, the name of the clients, very important information that you could include. Countries that you export, also very important and relevant for us. The key here is always to include numbers and figures. Let's go to the next slide. Market opportunity. Relatively easy chapter to understand. What we want you to do here is basically describe the market where your company operates in and how does your company or entity or organization fits into that market. So in section 4.1, what we want you to do is explain us the basic characteristic of the market you work in. Think about information such as, is it a very competitive market? Are there many companies doing the same thing as your company? Is your product a unique product, or are there any other companies that offer the same product or service? Other information that you can include there is, how does the price competition in this market works? Is it through purchase orders to contracts, or is it a spot market? And is it a volatile market, or it's a relatively stable market? You can also explain us in this chapter the specific products you offer, and also make a description of your main competitors. For example, you could include the number of the competitors that you have, or the market share you have in the market. Those kind of information sometimes are available through public agencies in your country. You can visit websites and see. If you don't have this kind of information, it is fine. In section 4.2, this is basically the area where you showcase your company. So what we want you to do here is to think creatively and write us down what is the strengths of your business model, your positives. So, for example, do you have a niche product or a very high quality product that differentiates you from the other competitors in the market? Do you have a unique selling proposition? Also, you could think, is there a government policy that is very beneficial for your business activity? For example, maybe your country has a free trade agreement with another country, so the export is cheaper. Other things that you could consider is local subsidies that are beneficial for your activities. Finally, if you have any form of certification, and particularly organic certification, fair trade certification, Rainforest Alliance, and other relevant certification, please include them here. Those are really important and appreciated in the CFC. Finally, you could add some information about your sourcing activities. How do you buy the raw materials from the farmers? This is very important information for us, and we will be taking that into consideration when we'll be assessing the actual impact of the project. The final chapter of this section, the 4.3 obstacle. Every company faces some challenges, some obstacles. Here, you just need to describe those challenges. Why do we ask that? Because we need to understand how we can tailor our financing tools to your needs in the future. So please be descriptive and tell us what is the main problems you face. For example, you could consider, are there enough employees in my country to hire for the specific activities I want to undertake? Is there enough machinery or suitable facility that I can bring into my country to produce my product? Other things that you could consider: sourcing risk, processing risk, also transfer of products. Are there, for example, enough containers in my country, or I have troubles with trucks moving from my country to export? So those are all relevant risks that you should reflect and write down. Let's go to the next slide, please. We will only have a short presentation for this one, because basically what it does, this chapter, it reflects the previous chapter. So what we ask you here to do is basically to describe us how would your company look after receiving CFC financing. So will you be changing your business model? For example, would you be following a new organizational structure or a new business model? Are you going to make any activities different? And secondly, and most important, are you going to increase your client base? Are you going to reach new clients, or are you just going to increase your export volumes to existing clients? Also, are you going to buy more raw materials from existing farmers, or are you going to onboard in your sourcing network more farmers? Is your production process being influenced by CFC financing? Are you going to produce more or process more, or are you going to produce higher quality products? Those are the main things that you have to consider in this chapter. And the final part of this chapter is innovation. Now, different people mean different things with innovation. In CFC, we have a very holistic way of looking into innovation. What is innovation for the CFC? Is basically projects with high impact. So it could be agroforestry programs, it could be carbon creation programs, it could be financial inclusion services, and many others. Now, the list here is endless. Try to be innovative yourself and see if your project is something new, because it doesn't have to be only new technology. It could be, for example, a new business model that nobody follows in your country or at your region. The list is, as I said, endless. So please try to be innovative. Let's go to the next slide, which I will leave to my colleague Andre for a short presentation.
Yes, thank you very much, Chris. And I was busy responding some questions in the background. The CFC positions itself as an impact investment fund. So the proposal needs to indicate in clear terms what kind of development impact is expected from the application of CFC financing. There is a suggestion of a few impact indicators in the spreadsheets that are downloadable from the CFC website. And basically going back to the operational model that we have seen a few slides ago, and I'm just trying to get to it. In a nutshell, without going into too many words, we will ask you to indicate how the investment of CFC money in your small and medium enterprise or an NGO or whatever organization you represent, how the CFC money will help translate the value of the commodity in the markets into the positive effects for the primary producers of commodities. And this can be employment, income, involvement of female beneficiaries, involvement of the youth, vulnerable groups of the population, community development, and other indicators. A suggestion on impact indicators, again, can be seen on the website of the World Bank, the Global Impact Investment Network. There is a range of indicators that you can propose. You don't need to propose many, but it needs to be very clear and visible how the CFC investment is going to contribute to sustainable development of the people who are the target beneficiaries of the projects. So I don't need to say more on this, since we're also running out of time. And Chris, you may want to quickly have a look at the financials.
Yeah, no surprises there. Before I go to this part, just remember you have to submit the application form that we are going through now, but also there is an Excel sheet where you add your financials and also your impact indicators, as Andre just mentioned. So for section 7.1, historical financial statements, and section 7.2, financial projections, you don't have to go through the whole financing structure and historical financials. What we want here is basically the story behind the numbers so that we can understand a little more the business model. So think about explaining, for example, why are your sales have been increasing during the last 3 years, or what is the key driver of profitability in your model. Again, we don't need a full-fledged analysis. We just need to understand how the revenue model of the company works. But I will underline the importance of section 7.3, sourcing of funding and additionality for CFC. What we ask you here is a very simple table that includes all your financiers or capital providers, including the amounts that they have provided to you, the interest rate, and the maturity or tenure that they have offered to you. Now, why is this important? You may ask, are you asking that to bargain with us the interest rate? No. The reason for that is that we want to see where the CFC fits into your business model, and if we can do something better relative to the other actors in the market, particularly local financial institutions. So please feel free to be transparent here, and in any case, we will be asking those kind of information during the due diligence process. The final section, 7.4, main risk of mitigants. Here, you will have to make a short list of the main risk that you feel that your company is facing. You could consider, for example, as I said earlier, sourcing risk, climate change, political risk, or changes in the regulatory environment. But then in this case, you should also provide the mitigants. What are you doing to mitigate those kind of risks? And let's go to the next chapter. Yeah, just the example of the Excel sheet that you will need to fill. Go to the next chapter, the next slide, please. And this is the balance sheet that you need to submit. It should be relatively easy for any company to submit this financial model. One note, for financial institutions, there is a separate Excel sheet available in our website that you could use instead of this one. Next slide, please. Yeah. The last one, many don't actually pay a lot of attention. For me, it's the most important part of the application. So I would suggest to you to always start and end your application with this supporting document checklist. Don't forget that it is mandatory to receive audited or not audited financial statements for the last 3 years. Financial projections, which will be provided through the Excel sheet that we just presented, including the impact indicators. Also, we would like to receive the company registration documents and also a legal ownership chart of all entities in the group or in the company that you belong. Finally, if you have any other documents that you feel that will improve our understanding in your business model, please feel free to attach them in your application. If you have, for example, a business plan, an org chart, maybe the CVs of your senior management people, the articles of association, or if you have conducted an environmental and social impact study for your company, please feel free to attach it, and we will try to also read those information. The more, the better. And then next slide, please. Yeah. Final part of the application. Please don't forget to put the name of the organization, the country, registration number, the website, and please include an email. Do not include an info mail. Try to use a specific email address because we will be contacting you if we move forward for this application. Next slide, please. And don't forget to click the affirmations. And I think we're done. We can have a couple of minutes of questions.
Right. Yes, thank you, Chris. And I will take the floor now. Since first, thank you. I think it's a record number of questions that we have received in the chat box on this. Also, thank you for providing your details. Again, we will share the recording with all the registered participants. The regular questions, about 1/3 of all the questions, concern whether the CFC can provide grants, and the CFC currently does not have the resources to provide grants. That means that any financing provided by the CFC will be based on an operational model that clearly shows how the money will be recovered if the project is successful. So that is the one regular question. Another regular question is, what is the interest rate charged by the CFC? And that will strongly depend on the model, on the risk model of the project. So it will be determined by the risk of the project. If we decide that the financial model of the project is valid, if the project is viable, then we will be able to look into the interest rate at a later stage. We should not give an indication now because it will strongly depend on the details. A regular question, can an organization of this and that kind apply to the CFC? Again, the answer is that any organization can apply as long as there is a legal personality behind it. So if an organization or a person can legally sign a contract with the CFC, committing to the project, then this is fine for the CFC. I believe this is the most common questions that I have responded, and I'm sorry that we will have to proceed to our next meeting at the time. Now, you have the email address on the screen in front of you. Please make a note of this email address. There is a real person behind it. This is an email address that is attended by a number of people. So any question that you send to the open call address will be responded. Yes, there was a question about the availability of materials in the French language. We have the materials available on the CFC website in French, Spanish, Chinese, and Russian and Arabic. So if you need the application form in another language, please download it from the CFC website. It is available. Chris, do you have any last minute comments?
No, I'm looking into the chat room. I think we went through most of the questions that are here. And again, if you have any further questions, you can always reach out to us. We will respond. We will try to respond as soon as possible.
Yes, thank you very much. So in the chat box, there is a list of member countries of the CFC. So if you have a question whether we can fund activity in a particular country, please check the list. It is possible for us to finance activities in the member countries of the CFC. I'm sorry that we do not really have the time to respond to questions by voice, again, because we need to proceed to other meetings. I would like to thank everyone for participating in the event today. And please do not hesitate to contact us on the email address provided. We will respond to every message that we receive there. Thank you very much and have a nice day.
Have a nice day.
Thank you very much.
Thank you.
Thank you very much.
Thank you very much.
Thank
Bye bye.
you.
Thank you very much, sir.
Thank you very much.
Thank you.